parts of the consumer are doing well. And, oh, by the way, they're saving at a record level at 14% versus historic average at 5%. So the consumer has some spending power. So, yes, banks are really hard to own, and I only own a few of them, and they're kind of special situations.
Well, but wait.
To be honest with you, I actually...
Wait.
What?
But, Steph, you added to Morgan Stanley. You're adding to the banks at the same time that a Warren Buffett is bailing on almost everything except for Bank of America. And your old pal Cramer, I don't hear him too optimistic these days about the banks, regardless of who's running them, regardless of what footprint they have. The environment has been horrible. Why are you adding to Morgan Stanley?
Well, by the way, Morgan Stanley is up 16% in a year. That's nothing to sneeze at, right? And I like Morgan Stanley because Gorman's doing all the right things. He doesn't want to be dependent on a yield curve only. And so he's making acquisitions that are higher multiple businesses, Eaton Vance and E-Trade. And that is the reason, their diversification is the reason that they grew revenue 17% in the quarter. So I like that story very much, and it's trading at 1.2 times book. It's not that expensive. So I like that. Again, that's a special situation in its own right. Wells Fargo is an absolutely special situation. It's a bet on Charlie Scharf, and he has all of his team in place right now. He's been there now a year. So now I think we're going to start to see some results. And there's all kinds of talk that they're going to have asset sales within asset management or investment management, or they're going to try to do things that are not core businesses to them, make the bank smaller, more manageable. And I do think, by the way, he's kind of really lowballed, kitchen sinked all the numbers across the board.
Okay.
So I don't think much has to go right for Wells Fargo to work. But again, these are all special situations. I don't want to just go blanket owning banks.
Okay. So, Jim, Steph makes that pitch to you. Joe, I'm going to come to you in a second. Steph makes that pitch to you, Jim, when you all were working together, and your response is what?
Well, Morgan Stanley does have a special situation because of the acquisition, and it does have a FinTech quality. People don't realize all these acquisitions that Gorman has made in order to be able to make it so that younger people stay in. He's got a company. He has a division that allows you to be able to get all these rich people from these IPOs to have a 401k with them. He has really done a lot of very quiet things that make it so that it's a little absurd that it's this low. So I can buy. I think that Morgan Stanley's fine. I don't understand a Citi. It is sort of a fraction of book value, and I'm not going to sit there and say, well, it's time to buy. I think Bank of America's had a very big run. I'm not really interested in that. But Goldman's intriguing. Chapel owns Goldman, if only just because it, too, is around book value and has a lot of optionality. But I like Stephanie's call because Gorman is trying to make that so it's not just another bank. And he, too, is trying to be FinTech, and he might be able to pull it off. Look, he's not going to be PayPal. It's not going to be Square. I mean, those stocks are sainted. But he's going to be something in between that and Citi.
Joe, when it comes to, financials and bank-related stuff, you've been talking lately about oil financials, if you will, right?
Well, that's my way to get energy exposure. I own a Texas bank which has exposure, TCBI. Within financials themselves, I 100% agree with Stephanie on Morgan Stanley. It's a name I own. I'll see your Morgan Stanley. I'll raise you a Goldman Sachs, a T. Rowe Price, a BlackRock, Ameriprise. I think these are strategically the right plays to get exposure within the financial sector. Banks are just going to continue to struggle. Money center banks will be challenged by what you were discussing before, which is the absence of support for Main Street in the economy, and by a yield curve that cannot seem to gain any form of momentum in steepening.